How are you all? Thanks for coming back to the show. We're going to talk about XRP to the U.S. attack now, so you need to pay attention. The event is happening now. It's about government bills and banking halls turning a switch that could go live at any time. XRP won't just move when it does. It will change the way the American banking system works. Today, I'm going to show you why insiders are calling XRP the next digital gold, why regulators are quickly becoming bullish, and why institutions are getting ready for something big. Please believe that after watching this movie, you will fully understand why XRP's time has come and gone. Today is the day. We are beginning right now because this is the time when everything changes. XRP is going to be used like digital gold soon. What was the trigger? A brand new U.S. Senate bill that no one thought would become law. But here it is. Not talk, not Bitcoin or Twitter hopium. There's a real legislative road on Congress.gov right now that could make XRP a commodity under the CFTC. Take that in. XRP has been attacked, confused, and fought over for a long time. It is now protected by the same laws that protect gold, oil, wheat, corn, and all the other important assets that keep the American economy running. This is what the U.S. government says. We need this thing. We want it to be cleanly controlled. We want it here. And when that description comes through, something really big goes off. It ends the argument about SEC security right away. It gets rid of years of doubt in an instant. All of a sudden, every bank, payment company, fintech, and other business that was just waiting gets a green light that is so bright you can see it from Mars. Exchanges in the U.S. are sure to sell it. Lots of liquidity comes in. Ripple has been making rails for more than 10 years, and now enterprise money can finally connect to them. Ripple didn't spend 10 years working with banks and regulators just because they were bored. You need to understand that. Before the biggest flood of money in our lives, they were putting in the pipes. With this bill, everything will fit together like a puzzle that's been waiting for the last piece to arrive. That's why some people say XRP isn't just a cryptocurrency. It's the first digital good designed to work with U.S. banking systems. It's not a hype. It was designed. It's the rule. It's about time. Of course, while everyone else online is arguing about whether markets are bullish or bearish, insiders like Jake Claver are saying something crazy but true. People in the U.S. can use XRP right now, today. And when he said it, it wasn't just a guess. He made it clear why. Except for Bitcoin, XRP is already more clear than almost all other assets. If there was a crisis today, like a lack of cash, a sudden change in the value of the dollar, or systemic instability, officials could use XRP on the back end of the stock market with the DTCC. That's not just a guess. That is something that only people who work with corporate infrastructure would say. And when Jake said that the president of NASDAQ revealed that they would be using distributed ledger technology to settle stock trades, everyone who was paying attention should have felt their heart rate go up. Because think about this. Major stock markets are getting ready to use blockchain to settle trades worth trillions of dollars. The rules, licenses, partners, and banking routes are all already set up for Ripple. The U.S. doesn't have to use XRP. The U.S. needs to use any method that can handle low-cost, real-time settlement that is legal. XRP was made to do just that. It doesn't wait. It's all set. As soon as those institutional processes are set up, the price of XRP will no longer act like a speculative asset. Jake gave a great explanation. The volatility goes away once real-world traffic starts to flow. The price stays the same, it gets more liquid, and as business settlement grows, XRP reaches a level where it can never go back to where it is now. Not because of all the talk, because math, because of the size, as a result of use. That's why people in the know talk about triple-digit XRP like it's a must for engineers and not a far-fetched goal. Now let's move on to Ripple's most recent ad for RLUSD. It wasn't a commercial, it was a message. As of today, RLUSD is Ripple's first step into the world of 24/7 customizable money. There are stablecoins that were made for business, automation, and fast settlement. Payroll that does its own thing. Value in other countries moving while you sleep. In seconds, corporate funds move money around. This is not a dream, this is computer code. The thing that most people missed is this. Ripple isn't just releasing a stablecoin, they're releasing an enterprise-grade stablecoin that is aligned with regulations, which is something that most of their competitors can't even do. By 2030, BCG thinks there will be up to $3 trillion worth of USD stablecoins in circulation around the world. And the people who will win, they are the ones that have corporate infrastructure, compliance, and openness. Every box is checked by Ripple. But now things get crazy in this story. Out of the blue, the Turkish exchange Paribu buys CoinMena, which is one of the Middle East's most tightly controlled enterprise-level platforms. CoinMena has licenses in Dubai and Bahrain, which are two of the toughest places in the world to get approved. Also, guess what? They already work together with Ripple. Plus, they're already linked to RLUSD. This purchase gives RLUSD something right away that USTD and USCD don't have. A stablecoin corridor that is fully legal and spans multiple jurisdictions across the Middle East, which is one of the world's most advanced fintech hubs. This is the part that no one sees coming. Ripple is not making things for crypto users. Ripple is making things for money systems, for the funds, for banks, for the government, as well as a legal passage from Dubai to Bahrain is the kind of move you make before going global. This is the infrastructure phase. On the surface, everything seems calm, but below the waves, the pieces are coming together faster than people can understand. Now, the US does something that almost no one saw coming that puts them right in the spotlight. The Bitcoin Act is now on congress.gov. That kind of thing doesn't get uploaded by chance. When crypto classification bills get this big, it means that something big is about to be unlocked behind the scenes. Rules are on the way. What's clear about Bitcoin quickly spreads. It always gets around. As for XRP, it is the only asset that is fully ready for institutional usage as soon as the US turns on the switch. Big businesses in the US are becoming very optimistic, and they're not keeping it a secret anymore. They're coming out in the open, making big predictions, getting ready for the next era of finance, and making it clear where they think this whole ecosystem is going. The CEO of Exodus is not making this stuff up when he says Bitcoin will reach $200,000 by 2026. That person can see how money moves on the blockchain, how assets are held, how corporations accumulate, how institutions demand, and how regulations move forward. People in power don't make public predictions like that unless they're seeing something change below the surface. His logic is exactly what you need to pay attention to. He's talking about how much gold is worth, which is about $18 trillion, and how much Bitcoin is worth, which is around $1.8 trillion. 10 times from here is just the same price as gold. The important thing is how he frames it. The US is about to enter a time when monetary policy, political incentives, and economic standing all come together. Rates are likely to go down by the Fed. Talks about stimuli are coming up again. Following Texas's lead, many other states are thinking about adding Bitcoin to their stocks. These are not separate events. They are signs of policy, and they have an effect on everything next to Bitcoin in terms of regulation, including XRP. Because if Bitcoin is legalized across the country, you can be sure that institutions and officials will move on to the next asset that meets their standards for settlement, interoperability, and cross-border use. Also, XRP is right there, easy to understand, has corporate infrastructure, and can move value faster than anything else regulators are willing to touch. Without the thing that keeps the tracks straight between systems, the digital economy can't grow quickly. Bitcoin is a way to store money. It can be moved with XRP. Insiders know that these two assets don't go against each other because of this. In the way that a modern banking system needs, they work hand in hand. Take a look at Wall Street now. There has never been such a strong shift by institutions in crypto. BlackRock is very clear that Bitcoin ETFs bring in the most money for them. Take a look at that. The world's biggest asset manager, which is in charge of more than 10 trillion, says that Bitcoin ETFs are their biggest growth engine right now. That alone shows where the money is going. It gets bigger, though. Larry Fink says that countries are buying Bitcoin. Take that in. The most clear macro signal you will ever get is sovereign bodies buying Bitcoin. Institutions follow when countries start to pile up. When big banks follow, regular people fear buy. When retail finally comes out, the early legal assets go through the roof. It's not just BlackRock, though. After saying they were against crypto for years, JP Morgan is now offering products that are linked to BlackRock's IBIT. Vanguard, which was known for being against crypto for years, quietly changed its mind and now lets clients access Bitcoin ETFs. How come the world's most cautious asset manager would all of a sudden let crypto risk happen? Because they know where the flow of money is going to change. They do this because they can read the rules on the wall, so they're not caught off guard when digital assets become the new way to handle money. Then there's the fact that Bank of America says 4% should be put into Bitcoin, not to gold, not to bonds. Bitcoin. And Charles Schwab, the leader in retirement plans, said they will start their own Bitcoin ETF in early 2026. This kind of change can only happen when an entire business gets ready for a new era of financial infrastructure. Also, keep in mind that once they accept Bitcoin, they grow. Blockchain is just the front door. This is how Ripple and XRP walk through the second. There is even money coming in from other countries. BlackRock's Bitcoin ETF was bought by Abu Dhabi for more than $500 million. Texas bought $10 million for its reserve. The adoption process starts at the state level, even before the federal government acts. That shows how early it is still. The Federal Reserve stopped quantitative tightening and is now getting ready for rate cuts, which have a 95% chance of happening. Rate cuts make risky investments go through the roof. Crypto has a history of exploding when funding rises. And right now, everything points to more cash. People call it the top, but it's really the starting point. The rotation starts when Bitcoin's institutional time is over. Institutions don't want to buy assets that are already fully grown. They move on to the next product that is legal, has a high upside, and has a real-world use. XRP is in a great situation for that rotation, especially since changes to regulations are happening at the same time. That brings us to something even bigger. The White House thinks that the economy will grow by 4% at the beginning of 2026. That number is crazy. 4% growth predictions just don't happen unless officials are getting ready for a lot of money to be spent, tax cuts, incentives, investment bursts, and growth in the United States. The markets melt up when growth speeds up. And when markets melt up during a time when crypto regulations are clear, the U.S. experiences a parabolic situation that has never been seen before. Stablecoins are going global. Ripple is expanding RLUSD corridors, compliant jurisdictions are approving partners tied to Ripple, and institutions are loading crypto like they're getting ready for a tectonic shift. It seems like every piece leads to the same result. The world's financial system is getting ready for a new digital standard. Assets that fit into that standard will be in higher demand than ever before. This is the part that most people miss, though. All of these things are happening at the same time. They're taking place in order. Bitcoin regulation, institutional acceptance, stablecoin growth, improvements to cross-border settlement, classifying digital goods, and integrating blockchain into businesses. For more than 10 years, Ripple has been getting ready for this exact process. Before anyone else knew they were needed, they made the tools. Right now, Bitcoin is getting the most attention from regulators. XRP is right behind it as the next piece of the puzzle and the link between the old and new systems for liquidity, not meant to take the place of banks, something that banks can use, not a threat to the government, a plan for officials to follow. And the people who know how these systems work together will be in the best situation when the switch is flipped. This is not advice about money. Every major country in the world is quietly choosing which digital assets to support. The U.S. is finally realizing that the person or group that controls the settlement layer of global value transfer controls the future of global finance. The U.S. depended on the dollar alone to stay on top for many years, but things have changed. Speed, the ability to program, quick settlement, and the ability to work with systems across borders are the new battlegrounds. Europe, the Middle East, and Asia have already moved quickly into blockchain-based payment. Now, the U.S. is speeding up because they know they can't fall behind. For some reason, almost no one sees how XRP fits into this picture. The U.S. doesn't have to start from scratch to make a new city map. It was already built by Ripple. It already meets the standards. It's already linked to cross-border infrastructure, banks, payment processors, exchanges, authorities, liquidity providers, and payment processors. Ripple's architecture is also different from most crypto networks because it is built for enterprise-scale throughput, dependability, and regulatory integration. It's more than just a sign. It's a plan. And when a government or big organization picks a settlement layer, they don't want it to be unstable, confusing, or use new technology. They want something that has been tried and true for 10 years, something that made it through regulatory fights, something that already has world roots going through it. That's XRP. Things get even more interesting now. The story about the digital dollar won't go away. A lot of people don't know this, though. You don't need a CPU to use blockchain settlement. A lot of states don't even want a full CBDC. They want stablecoins that are regulated, tracked, and can work with other coins. The RLUSD from Ripple is coming out on the market at the exact same time that global stablecoin lines are being set up. I also think Ripple has something that no other stablecoin provider does. At the banking level, there is direct corporate integration. That's why the purchase of Paribu Coin is so important. It did more than just add new areas to RLUSD. It made a legal corridor that Ripple can use to connect stable coins, settlement flows, and on-off ramps. This is how the infrastructure for world settlements is put together. Instead of a lot of noise, they use licensing, passageways, partnerships, and enterprise-grade rails to get everyone ready for the flip of a switch. That's why experts like Jake, executives at Ripple, and leaders in the field keep making the same point. XRP is not waiting for permission. XRP is waiting to be used. There is a huge difference. Activation means that the system starts working as soon as the rules are clear. Banks don't need partnerships that last for years. There's no need for exchanges to rush. There is nothing that institutions need to fix. The building blocks are already in place. That's why the labeling of the Senate bill is important. That's why the CFTC's watch is important. That's why understanding, not building, is the spark. We're not done yet, though. There is a direct link between what happens in the macroeconomic level and what happens in the legal and institutional level. The fact that the White House thinks growth will be 4% in 2026 is a clear sign that the political and economic plan is changing from defense to offense. When governments expect strong growth, they plan for growth, spending on infrastructure, tax breaks, investments in new ideas, and updating all of the financial systems. To modernize, you need digital tracks. It means payment on the blockchain. It means payments in real time. It means that old, slow methods will no longer work. When development is part of a country's plan, the assets that make it possible grow. That's why banks are putting Bitcoin on hold. That's why banks are letting people in. That's why Wall Street is getting ready for a run that will last for years. And once Bitcoin's institutional growth is complete, the money will move into assets that have a purpose, good infrastructure, and the approval of regulators. The exact area where XRP rules. The pattern of rotation is starting to take shape. You can see it in the way institutions invest. First, they put money into Bitcoin, then ETFs, then regulated alt assets, then stablecoin rails, and finally business integrations. This is not psychology for stores. This is a planned rotation of cash, and XRP is right in the middle of that shift. The US has not yet approved the bridge asset, the settlement asset, the interoperability layer, or the digital commodity group. The United States needs a blockchain-based payment layer that isn't run by a private company or a foreign government and isn't based on guesswork. XRP is the best choice because it is neutral, decentralized, fast, and already deeply integrated with banking partners that follow the rules. Now think about something even more important. It was time. It looks like 2025 and 2026 will be the most important years for money in modern times. Monetary policy is being eased. You have plans for relief. There are states that are using digital assets. Congress is putting forward bills. You have world laws that are aligning. When institutions buy, it's like they're ahead of a statement. It's clear when you tie all of these threads together. There are no plans for a slow decade. They are getting ready for one that will go off. BTC's rise is just the beginning. After the first step, there is structured rotation. The third step is adoption made possible by regulations. Global settlement merger is the last step. With each stage, it's easier to see what part XRP plays. It's what holds traditional banking together in the digital age. That's why people who know about it call it digital gold with utility. It's not just a way to store value, it changes value. And in the new financial system, the product that goes up in value is the one that wins. Imagine that there is an instant settlement method in the US 24/7. Cross-border payments can be made. Corporate funds move money around on the blockchain. Trades are cleared around the world in seconds. Stablecoins also work on controlled tracks. Institutions are getting ready for this kind of setup. This is what managers of the system are planning for. This is what Ripple has already built. Digital assets that really do something will be the foundation of the new era when everything falls into place. One of these currencies is XRP. One thing is clear as we look at the news, the changes in policy, the positions of institutions, and the growth around the world.